We got a new property today from Mogul. This was posted in our Discord by one of their employees. I don't believe it's live on their site yet. I think you have to have the link. It's the Hugo. It's in Dallas, Texas. It's a short-term rental, 5 bedrooms, 3 bathrooms. I'm going to dig into quite a bit about it today, show you some air DNA data. I think that they're doing a good job with their on the revenue side. We'll dig into the price a little bit. It's difficult. This is not a market that I have MLS access to, and it's in Texas, which is a non-disclosure state. So getting real sales comps to look at are is a little bit difficult. But I'm gonna show you what I came up with. They do provide some as usual. I haven't always loved the ones that they've provided when I've had MLS access. So I'm gonna show you the homes.com info I pulled up as well. Little bit of an irregularity on the flood map that we'll talk about, and jumping into the market and the crime and all that sort of stuff as well. So let's see. To start, well, before I get started, please like and subscribe. In the description to this video, I've got links to all the platforms where I'm currently investing in fractional real estate. Please do your own due diligence on all those platforms and any properties you might see me buy on those platforms. Just because I buy them doesn't mean they're the right thing for you. That includes my opinion of this property today, right? I am an agent in Texas. I'm not your agent in Texas. And so, especially whenever I'm doing the Texas ones, I'm a little bit more nervous to talk about it. But, just make sure you realize, like, you really want to dig into this yourself. Don't just buy it based on what I have to say. Just trying to share some of my knowledge, some of the stuff that I'm looking at. Um, but it's up to you whether you like it or not. And this one, honestly, I'm on the fence about. There's a couple little things that give me some pause, but then there's some stuff that I really like about it. So first of all, the number one thing I like about it, this painting here with a walrus. I mean, feel like I almost want to see if they'll sell that to me because it's just fantastic. But anyway, there's this property is a little bit different. Normally, they're buying ones that have been used and they can use the historical data that have been used for short-term rental or for pad split or whatever they're doing. This one has been used as a vacation home part of the year and an investment property part of the year. It's very common with short-term rentals, and so they're able to verify the actuals, but they annualized it to give you a full year of investment. I think it's a little dangerous to do that in general because um, some owners are only going to go use it on the times that it was going to be vacant anyway, right? Like it'll be last minute, they don't have anything booked, and they're like, okay, let me go use that. And then some of them buy it mostly for their own personal use, and just let it fill in the calendar whenever they're not going to be there. And so there's no way to really know which one of those is the case or if it's somewhere in between. So I always get a little bit worried when people are doing that. But I'll show you the air DNA data, and I'm actually not worried about it at all on this particular property, and I'll show you why. Um, but so with that, they've got NOI yield in year one of it's actually slightly over 9%. Though I don't even think I told you. So the purchase price 690,000. They're using the 70% LTV interest only loan again. Same rate on that, 6.75%. This is really strong. Like they're able to get very good financing. Um, they're projecting their year one income as 105, and this average this information about average yearly rents for nearby properties. This lines up really well with what I found as far as for comparable properties. So I'm going to show you that. Um, I love that they're always conservative on here as far as yield, especially because going into what might be a recession coming up, which who knows? I don't know whether or not we're having one soon or not, but we will have one, and a lot of people are starting to feel like we're due for one. Um, Travel is one of the first things that people cut back on, and so to think that there might be some down years in short-term rentals, I think it's absolutely possible. So to be a little bit conservative on that, I'm happy that they are. Um, they did give us. Oh, there's one inconsistency, I think. So where did it go? Oh, I passed it up. Oh yeah. So they're saying they purchased property in June and then anticipated first dividend in September. Um, this is not accurate. Or at least I don't think so. When I look at the contract that they provided, They had the closing date of August 7th. And so, I mean, maybe they're going to plan to close early, but I think that this might just be an error. Um, One thing that this is the first time we've seen this in their one of their contracts. There wasn't a whole lot of note, but they did have exclusions here where even though it's a short-term rental, they're keeping a whole bunch of stuff: a piano, some drums and stuff, musical equipment, toilet paper holders, the big green egg, some tools. But so I mean, clearly this was used. Uh, they were getting some personal use out of this, and so they want to take some of that stuff out. So I think this chair is the green chair that they mentioned. I didn't see the big green egg, but I'm pretty sure that's like those smokers. So it would have been in the backyard. I'm assuming this is the musical equipment that they're taking. Um, and then there's a piano. I think you can see it in the Zillow listing. But so that stuff's being taken out. One of the things that I think is interesting. So this hasn't been being used as a bedroom. This hasn't been being used as a bedroom, and maybe this one's too small, but and they're still were able to get pretty strong revenue already. This thing, I love this. It's made out of a shipping container. I think if you've been watching my channel a long time, I started this channel to document me building a shipping container home here in San Antonio. That was a messy project, but I am a sucker for these. Like I think that I like the aesthetic of them. I've never seen anyone just use a little corner of one like this. Um, I think it's I don't know. To me, this is cool. This is like the type of stuff I like to see a lot. They have this little balcony. This is just a property that I think I'm super excited about the way this looks, and I think this is the right type of I think it checks a lot of the boxes. Like I know here in San Antonio, this property would do incredibly well. Um, so I just wanted to show you that. But I'll dig into the air DNA as far as for the income. Let's see. This is the first one on Mogul that we're looking in Dallas, and so I was excited to get into the Dallas market. I haven't really been there. I worked there in like 2006 or seven for a short time. Um, it was actually a summer internship when I was in grad school where I was working for a public REIT. So I got to drive all over looking at multifamily deals in Dallas and Fort Worth. Um, what's interesting is that is the only decade that they didn't have great growth. I don't think it's because I was there, but you just never know. I really don't know what happened there. My guess is it was about more people moving to the suburbs because if you look at the metroplex, they had really strong growth. But just in Dallas proper, that decade was not great. But I mean, overall, there's very strong growth. Um, I thought that was kind of interesting, though. I don't know if maybe this is when there was a big discrepancy between prices in Fort Worth and Dallas. I actually think that's probably true because um, I lived in Dallas and worked. I mean, I lived in Fort Worth and drove over to Dallas to work every day because it was way cheaper for me to live in Dallas or in Fort Worth for the summer. Um, I don't really know. I mean, it is a market. It's one of the main markets in Texas. It's one that I'd like to be in long term. It like I said, I mean, it's had incredible growth. Dallas and Fort Worth combined is the largest metroplex in Texas. Individually, they're not. What was Dallas? I don't remember. I think when you pull them apart, that Houston is actually the biggest, and then Dallas, and then I think Fort Worth is actually smaller than San Antonio, but I don't remember. But anyway, most people now just think of it as DFW, right? It's combined. When you look at the cities, they've just really grown together. I actually really like uh, the idea of being in between the two cities versus like there's a ton of growth up here, um, but you don't have as much supply constraint when you can just grow forever outside of the city. So I do like the spot from that perspective. Um, I'm going to just show you a little bit. And so it's not a spot, it's not a part of town that has just unlimited places to build. And you can see, okay, so this was built in like 2022, I believe, but it was, it's an infill project where this is a city or a neighborhood that's changing quite a bit. You can see there's other construction projects, and this is last year, so I'm sure there's even more that are done. Um, But looking at comps, that you know you have a lot of this, right? You have like these little older homes, and then you have major rehabs, and then you have new ground up construction where they tore something down. It is a very much a neighborhood in transition, which I tend to like to invest in those. It doesn't seem, at least this is just really my opinion here. It doesn't seem like it's so rough that you're going to get a lot of guest complaints about the neighborhood. I mean, this is the worst looking home that I found as far as obviously I don't think this trash is always here. You know, although this truck could have been there for a very long time, you just never know that. But in general, most of the homes are relatively well kept. I didn't see a lot of graffiti or anything like that. Seems we're talking about that. We'll jump into the crime map. Oh, let's close that. This is the property. Nothing popped up in the immediate area. It populated a pretty broad area to fill it up, but this is only 4 or 5 days. It is interesting. I don't really know how spot crime decides how to do that, right? How whether they're going to spread out or give you more, go further back in time. But it's not the best crime map we've seen. It's not like those ones in the middle of nowhere in Ohio, but it's pretty good. I felt pretty good about it, especially like when you start to really zoom into the neighborhood. Okay, you had a couple of burglaries, you have some thefts, but there weren't a whole ton of assaults like we saw in some other places that we looked. So I felt pretty good about this. We might as well jump into the flood map while I've got these tabs going, and then I can close them because my computer has been finicky. So let me get some tabs closed. But so this is one thing that I haven't run into before, at least that I remember. So I'm always looking for zone X. I want to be in basically not a floodplain, right? And it's not that it's not a zone; it is zone X, right? But it's you think of it as moderate to mild risk or something like that. But usually that means it's not shaded at all. Well, this is in zone X, but it's what they call shaded zone X. I had to like look this up because I hadn't run into this. Um, I actually think that I might have in one other video, and I read it, and it was one that I was just like, I'm not going to invest in this one anyway. So it was just like one more reason. But this one I'm really on the fence about, and so I had to, I dug into this a little bit more, and it's a reduced risk because there's a levee. So like because the levee there, it's now a zone X. Um, I tried to like, I spent a lot of time, and it wasn't super clear. Uh, but it's basically they're saying, well, it's a moderate flood hazard. It's usually between the 100 year and the 500 year. Um, I think that, and I probably dig into this a little bit more, but I think that I'm probably okay with this, even though in general I'm like, oh, I avoid flood zones completely because it is it's zone X. So I don't know. Anybody who's watching this, if you have more knowledge about this, we just don't have levees here. At least none. This is not something that I've run into. Um, because usually I'm just ruling them out completely, but it just kind of threw me off guard because it is, I think what they're saying is, yeah, it's the risk level that I'm usually looking for. It's only but it's artificial because there's levees. So maybe that means if they don't maintain those levees, that's going to go away. So they're just trying to give you that insight that there could be some additional risk. I don't know. I thought that was interesting. I'm sure somebody watching knows more about flood zones than I do, because, like I said, I mean, I've really just always tried to avoid them completely. And so, let me know if you know about that. I'd love to hear more. Luckily, I think we have a little bit of time before this one closes out because it is a little bit bigger of a raise. Like I said, there's a lot I like about it, and so I think I'll probably be buying some. But I do want to just get some questions answered. I'll probably even wait until after the webinar on Tuesday. If you haven't signed up for that, you should do that. Always go on their webinars because there are a ton of great info. Um, Let me see. Is this a yeah? So one of the things, so they always provide their comps. Um, one of the things, it's so hard to find what these things are really worth when in Texas, it is a non-disclosure state, so you don't always have the closed prices for things. This is price unknown, but you don't always have closed prices for things Although I think that some of these, yeah, had a pending sale, sold, not reported, right? Same thing. I think all of these are, but these are the comps that they picked. They all seem somewhat reasonable. I couldn't find them to verify their sold prices. Um, but I mean all all relatively similar size. All of these are recent sales and prices that make it look like this one makes a lot of sense. Obviously you want to really look at them, see how they compare to what we're getting, but um, I always bought in Texas or in any of the non-disclosure states where you can't really find the stuff in third-party websites very well. Um, it always bothers me a little bit, especially because I know like in Austin, some of those deals where I have MLS access there, and Houston as well, I didn't always love the comps that they chose for the values. I think this neighborhood is going to be super tough no matter what anyway, because where you do just have this infill construction. I had actually done a little bit of research on my own, and just come up with these ones through on homes.com. These are all significantly cheaper. Uh, they none of these have a pool though. And I think, okay, is a pool worth 140,000 or 120,000 or and I think honestly the answer is yes. Which I know people in some markets think that that's nuts. Here in San Antonio, if you had this home added or this pool added to your home, depending on what part of town is, I think you easily change the price of the home by 100,000, maybe more. So I'm pretty comfortable with the valuation. Although I'd love to have better data, but we run into this quite a bit. One of the things, if if I find something and I'm like really unsure about it, like I still haven't bought any of the Johnson 2 because I just really didn't like the values on that. But I mostly based on stuff that I was pulling out of the MLS and not a lot on info that I found elsewhere. So I don't know. It's one thing that I always worry about, but because their yields are so strong, um, it makes me worry less because okay, if we get 10 years from now and it turns out we're not going to sell it for a big pop and we're just going to hold it longer, I'm pretty okay holding for a very long time if they're able to continue with the business model where you're getting a good yield. Of course, I always I always say yield is temporary, basis is forever, and I think that's certainly true. I'd like to um, buy bigger discounts. But I think this is just not really the platform for that, right? We're just not really getting a discount on a deal. Here we're getting good, Mogul is focused on strong markets and picking properties that, do provide really great yields, based on the business models that they're choosing in those markets. Um, and it's just a different strategy because I really like the deals that they pick. I have been uh, buying quite a few of them and pretty okay with not getting the types of discounts that I like to when I buy a property in real life or even on some of the other platforms. Um, I know that's probably been an inconsistency with the way I talk about things, but I think it's the biggest thing is a different is that I really like that they're picking growth markets. Let me though give you a counterpoint to that. Dallas or this zip code did go down in price 4.6% last year. They're projecting the price to continue to go down. Um, I always take the projections with a grain of salt. But you can see, they had this a very similar shape that we've seen in other markets. Um, I think that yeah, in the short term, we could still have some decline in pricing, but in the long run, Dallas is a market that I'm very happy to be in because of the because of the growing because it's such a strong growing market, and the our location in this market is such that it's not that they can't just build forever in that location as well. So um, yeah, I don't know. I think that's all I really want to say about the valuation. I already looked at the map. Oh, I want to get into the AirDNA because this is where I think that they are really sandbagging a little bit. So, um, I found the property itself, it's giving a projected revenue of 100,000 when I just put in, 5 bedroom, 3 bath, 10 guests. What happens if I put 12 guests though? Because I feel like 10 is pretty small for there. Yeah, they're still doing that. Can we make it say a different number? I should have probably done this before I started recording. Yeah, okay. I can't really make it say a different number, but one thing that AirDNA does not know is that this has a pool. And I think that when you really start to look at properties that are comparable, okay, this is one, similar size, right? 5 beds, 2.5 baths, another relatively new construction, no pool. This one made, top line revenue 104.5 thousand in the trailing 12 months, right? So, uh, and this is what they're projecting. So they basically have a very similar home to this home, except okay, add on top of it that they have a pool, which for short-term rentals in Texas, I mean it makes a world of difference. If you're going on vacation in Texas, Texas is just hot all the time, right? You just want a pool. So it makes such a big difference on both your average daily rate and your occupancy, especially when you have these bigger homes. Here in San Antonio, my day job, I run a small team of agents that we help investors find properties for, to buy here. Almost all of our deals in the last probably 18 months or so have been, the vast majority have been short-term rentals that are these bigger homes with pools. They just do really well still. Having the the nice home that you can have a large group and but so okay, so this I think creates a very good floor, right? Same home, no pool, 104.5 thousand, right? Um, and you get to this next one. This one made 120,000 in top line revenue again, according to AirDNA, and this is their pool, right? It is this is not comparable to the pool in the backyard of the property that we've got, right? 120,000. So I think that is um again like a really good, so I think their 105 is very conservative when you have basically the same home with this like janky above ground pool. It's again 5 bedrooms, 3 baths, and actually I think I had said this was the first one was the same as 5 2.5, but we actually I think we're at 5 3. Um, so 120 right in top line revenue. Well, if you hit that with ours, I mean it does amazingly better, right? I mean it's basically it's all extra yield. I mean, it's not like you have some additional expenses, but you have a lot of fixed expenses that you're already overcoming with that 105 that we're projecting, and so the additional 15K, a very large percentage of that goes to the bottom line. So this is another one that I think like, okay, can we beat the 120? Yeah, I think so, right? And then okay, this is the first one. This one is 138,000. I think this one's probably a little bit, it's a little bit bigger. It's 5 bedrooms, 4 baths. It's got a little bit more outside, balcony space. The home definitely looks nicer, bigger yard. Although it seems like maybe the pool's smaller. It's tough to tell. But I think that probably puts a nice top end bracket at 138,000. But I mean, again, I mean, if we're between 120 and 138, let's look at when they actually say they're getting to that point, right? So when we look at their projections, they're not planning to get there until year 5. Um, and so, that I really like when they're conservative like this. When you look at AirDNA and it just I mean, if I were looking at this for myself or for a client here in town, these are the comps that I would send. I'd pull up AirDNA, do the same thing that I did for this, and think that like somewhere between these two numbers, right? Okay, I think we can probably do better than the 120. We probably don't quite get to this one, but this is a pretty close. And then this is another one that's at 130. That again, 5 bedrooms, 2.5 baths. I think this one might be a little bit bigger of a home because they do have 16 plus guests. And just looking through the pictures, I got the sense it was bigger. But again, no pool. I mean, they have the little fire pit. They have a bigger backyard and whatnot. But so I think all of those, when I dug into those, and those were, so this is the 138, really close. Um, this is the 130, and then let's see where the 120 was a little bit over here. But these are all relatively nearby comps. Um, and I think that, so I really like that they do this, right? Like if they had said 120, I wouldn't have argued with them, right? But they said, no, you know what? We're projecting a good yield. 9% is perfectly solid for a year one yield. And, we're just going to be a little conservative because the property, it didn't do that higher number before, but yeah, it was also being used as a as a vacation home for the owner. So I don't know. I feel real good about that. Um, I think I mentioned this already, but just in case I didn't, I actually had to start this recording over a couple times for some technical difficulties. But short-term rentals, if we do run into a recession, they're going to get hurt, right? Your top line revenue is going to decline, and so I like that they're being conservative there, but provided that there's not some prolonged recession, it seems very likely that they're going to be able to outperform on the yield side. And if that's true, then the valuation stuff doesn't bother me at all. And honestly, I'm not really arguing with their valuation on this one, where some, excuse me, some of them I really feel like we're overpaying. This one, it doesn't seem like it is to me, but I just don't have access to the raw data that I really want to feel very good about that. So I think probably the answer for me is I'm going to buy a piece of this, but maybe not as big. Trying to basically, whenever I really like something, buy a little more of it, and if I don't like it, buy a little bit less. And I don't have to be that way. I don't have to be completely right. I just have to be directionally right, and overall, I'll be better off than if I bought the same amount of every single one. Um, and then some I just decide not to buy at all, and I think that that is the right answer if it seems like it doesn't match up with my risk tolerance well. But I think that that is everything I want to say about this one. We did the flood map, we did the crime map, we did the market, looked at valuation a little bit, but yeah, the other thing too, this has been listed for a while. Um, they had dropped the price a couple times. They dropped the price about a month before we got it under contract, it looked like. But I don't know how long there was back and forth, so they might have made an offer pretty close to that. Um, but then, on top of it, we got a significant amount of furniture thrown in. I think they said, when they itemized it, they were saying like, oh, yeah, value of over 30K for furniture. A lot of times people who see stuff like that and think, well, that's ridiculous. But I honestly don't. Like when I've helped clients, price out stuff for their short-term rentals, we've had clients spend 50, 70, 80,000 dollars outfitting a short-term rental pretty well. Now we're not, this isn't completely done, right? Because we're going to, um, this room's going to be different. Maybe the gym's going to be different. I don't know. But I mean, there's going to be stuff that they're missing, and then we're going to have to add some, so it's not going to be, there's going to be some money spent on that, I guess is what I'm saying. But in general, I think I think they're probably getting a lot of value from that. And I think it's, when I know it saves a lot of time, right? If you just have to go, okay, let me just backfill a couple bedrooms and one other piece, but I've got mostly the furniture and decor and stuff picked out. Time is what makes it a real hassle when you're doing these on your own, right? So that, which I think is a big part of why um, they're buying them the way they are, right? If it's already operating, you get the security of knowing, okay, this has already been doing reasonably well. I just have to imagine it's going to do significantly better. I don't think a lot of people are renting this to play these drums, right? And so if they're not, you're better off having this as an additional bedroom or maybe a game room, So I don't know. So I think there's probably, it's very clear to me there's room to make this perform better than it has. Um, yeah, I like it. I like it. I don't love that Dallas's, home prices have gone down, but again, I don't think that that's going to be a long-term trend. It doesn't seem possible to me with the population growth that they are continuing to have. I think it's that it moved up a little bit too fast and, is coming back a little bit. Also, interest rates have had an impact on that. So it is something that is it's tough to figure out going forward, right? What's going to be the right answer there. But I think that all we can do is try to pick markets where we think that are going to outperform. Texas in general, I'm obviously bullish on. I moved here 7 years ago now because of that, and in all the major market now, obviously San Antonio is my favorite Texas market, which is that's why I'm here. But I think Dallas is another one that makes a lot of sense from a lot of different perspective, and it is, for short-term rentals. Uh, I really like it when you can do it, when you can do it where you can buy it at a good revenue to price ratio. Oh, and also, okay, so that's one of the things that, that's what I'm always talking about, right? What's the revenue to price ratio? Well, so for 190, right, if I'm trying to get to 20%, I mean 690 times, times point 0.2, it's 138,000, right? Well, I said that's probably the higher end of where we're going to get to. But at the same time, when I'm doing those revenue to price ratios, I'm usually doing it pre-buying the furniture, right? So if you wanted to say 650 times point 0.2, it gets you 130, which is right around, we're in that ballpark, I think, right? And so that's what I'm always trying to get close to. So if this were a vacant property, and I'm looking at this would be very close to what I think makes sense as far as, um, this is what I'd be looking for: high teens to around 20% revenue to price ratio. And it is like when we look at those, like when a lot of the ones I've been critical of on Lofty have been like 10%, 12%, very, very low, not usually hitting the teens. And so I think that's the difference, right? That they're finding ones here that just have much better revenue for what we're paying for, and that's why I like these. But like I said, uh, I probably am going to do a little bit more research on the flood issue. I think I'm comfortable with it, but I'd love it if people would chime in and tell me, have you ever experienced that shaded X zone, which is just weird, And then what do you guys think about the valuation too? Like, do you think that we're paying too much? Do you think it makes sense? From what I could tell, I am pretty comfortable with it, but I would just like to have better data. That's just me being overly conservative. So yeah, like I said, probably going to buy some, probably going to be a little bit. I might do a update on that later if I come up with anything good for you. But yeah, let me know. Jump in the comments, jump in the Discord, tickle the like button. I am going to do another video where I just go over my portfolio results. I thought I'd break it up this time because it's probably too much to just cram all into here. But thank you for watching. Have a super night. Until next time, I'm going to keep making mistakes so that you don't.